Satish. Suresh. He like it. You don't like that.
Podium mic off చేయండి.
చేయండి. వైద్యం వచ్చే ప్రతి చైర్మన్ గారిని మెసేజ్ చేసుకో. This will like also. Yes, yes.
So thank you. First for inviting me. I think this is my first visit to Vijayawada.
Ramesh, కొంచెం సౌండ్ పెంచు. సౌండ్ పెంచు.
So can somebody who's sitting behind come first, so I did not project my voice a bit too much, especially I think till this day fine.
Because Sunday morning, sir, everybody will come very late.
No, so
At least
it's fine, but whoever is there, if they are coming in the front, it becomes easier.
everybody is their back bench. Prefers to interact. I understand.
It becomes easier. I would not. Thank you. So the topic given to me is long form audit report and advances. So I'll start with advances. Most important because advances determine what fees we will get. So the first thing when we get the letter is we look at what is the size of the branch in terms of advances. And they give an indicative figure as of a date. If it is in the borderline, then we ask what would the advances be as of 31st March, because if it crosses a particular threshold, I think over 75 crores, over 125 crores, then the fee slab changes. So advances remain highly relevant for auditor. Now, in a bank branch audit, till a few years ago, advances remain the most important part because of the fact that any MOCs which were passed were only in advances because the NPA classification was not correctly done. Now, with this automation of NPAs, this has reduced to a large extent. So the MOCs relating to NPAs hopefully have got reduced. So the divergence of NPAs, which was biggest worry of RBI, has reduced to a large extent. The nationalized bank also, based on their consolidation, the gross NPAs of the banking sector has reduced largely from what it was on 31st March 19. So the portfolio is relatively healthy with a lot of oversight coming in from automation. So that makes our work relatively easier. So there are other areas, however, in advances, which one should be worried of, and that is frauds. And I would cover that in each of the advances modules, as I would say, we will go ahead. So the first thing when I look at advances in a bank branch, when I go on day one, is I ask the listing of advances. I want a listing of advances borrower wise. I want a listing of advances facility wise. And if possible, I want a listing of advances industry-wise. So these are the three advances bifurcations I take right on day one. Then I ask for the classification, whether these are NPAs, these are standard. If these are standard, I ask whether these are SMA 0, 1, 2. And if these are standard, whether these have been upgraded at any point of time during the year or in earlier years. Then I ask whether in any of these cases, there have been any TODs or ad hoc sanctions during the year. There have been any cases of restructuring or reschedulement during the year. And I also ask how many of these accounts are covered by stock audits, by external audit. So the first thing which I do is I get an MIS, which is complete of all the advances, which gives me in a nutshell which advances I should focus on. In the LFAR, it is mandatory for me to comment on large advances, and those large advances basically have to be filled up in a format which is given in the LFAR. So the first point is you identify those advances which is a certain percentage or over 5 crores, whichever is lower. You give it to the branch to fill it up in a particular format. You obtain that format. And then basically, you have to comment on those advances specifically. So what we do is first is selection of the accounts which we will take up for our audit. So one is the large advances. Now we consider what is the total advance of the branch, and these large amount month is how do we go about it? I think you could switch this off to stand up. Yes, can be switched off. I feel it whenever there is a not almost needed. Yeah, I can.
Laptop works.
This can be close to here.
Yes.
Yes,
it's Chandra.
Fine.
Oh.
So let's assume the advances of the branch are 100. Mandatorily, you have to cover certain accounts which are over a particular threshold in the LFAR, and the questions which are there is given in the LFAR format itself. So you cover that. Let's assume there are 5 advances which are covered and they account for over 40 crores of the advance. So what I have done is I have covered 40% of the advances. I generally aim that I cover that many advances which would account for at least about 65 to 70%. Over 2/3 of the advances I would like to cover completely. So that's my audit sample in terms of amounts, not necessarily in terms of number. So the first key thing is which accounts you would take up for your audit. One is which is mandatory to be done as per the questionnaire required in the LFAR, so that's one. And in addition, I will add next the top account. So let us say there are only 5 accounts. I'll take the next 5 accounts. So that will make it 10. And let's say these are typically across these big accounts will be basically business accounts, cash credits, term loans. And if it's a retail branch, I would take up some sample educational loans, I'll take up some sample vehicle loans, I'll take up some sample mortgage loans. if there are loan against fixed deposits, loan against securities, I will at random take 2 or 3 such accounts. So I have about 20 or 25 accounts in number totally, which may account for about 70% or so. But I see to it that I at least covered 2/3 of the total advances of the branch. So first, the percentage I should cover, the number I should cover. Generally in the branch, the 25 accounts which I am covering, taking the top 10 and 15 other accounts in random will account for about 20-25 number. I give that list right on day one, and this is what I want the information on. For the first 5 accounts, I want them to completely fill up and give it to me because that's what the LFAR format says. So one, we are clear on day one. How many accounts we'll take up for audit? Percentage over 2/3, number maybe about 20-25. Huh? We have to mandatorily select, as I said, all advances which are over 5 crores or more than 10% of the advances of the branch, whichever is that figure is lower. So let's say the advance of the branch is itself 40 crores, then more than 10%, if there is anything for 4 crores, we have to select. But 5 crores for whatever is there is mandatory to be selected. So one, the number is mandatory. The second, I would select that many advances in outstanding amounts, total of which comes to more than 2/3. So I will not select 100% number. So let's say there are 100 advances totaling to 200 crores, of which 5 advances are mandatorily covered, which cover about 70 crores. So that will be about 35%. Then I'll cover, if there are 5, I'll cover the next 5. So I'll definitely cover the top 10 advances. And then I'll cover a list of other accounts. So I will take them. The number is about 20-25. I'll try to ensure that that number is more than 2/3 of the total advances. 200 crores, I'll see to it that if it's too much of a retail branch, then I will at least try to see that I at least cover 50% in number. If it's 200 crores, multiple retail accounts, I might increase the number from 25 to 30-35 in number, but in percentage, I'll see that I at least cover more than 50%. So
actual branch is itself having more than 60% gold loan itself.
So if the branch has more than 60% gold loans, what I will do is, if there are 10,000 gold loan accounts, let us say, I would pick up about 100 gold loan accounts. That's maximum what I do. Then in your specific case, this number 50% in value may not be achieved because this is a pure retail branch. In your case, there will not be a single account which will be over 5 crores. In that case, whatever is over 10% single account, you will have to do. If that number is not there, there is no account which is more than 10% because there are so many small accounts, then in your LFAR, there will be no such comment specific. There will be generic comment on the general account. So I might cover more than 100 or 100 because I really don't have the time to go in further. So some sample educational loan, housing loan, vehicle loan, mortgage loan, and all types. Give a holistic report on the electric. So this is the coverage. Fine. But yours is an exception branch. In Mumbai, there is one account which accounts for 40% of the advance. And if you take the top 10 accounts, this top 10 account will account for 70% of the advance. So it will vary from branch to branch. But I'm saying as a general number, if it's a wholesale branch, you do this. If it's your retail branch, there are 10,000, you do 100. 100 also is too much. If you do 50 also, it's fine, but do those 50 in depth. So what you do in that, then we go ahead. The first thing is for any advance, and I'm also going the requirements of the LFAR when I'm checking the advances. The first is starts with how is the loan coming into the branch? Who has got the loan? That is the first thing I check. What is the source? If it's a gold loan, obviously there will be an advertisement, there will be a word of mouth, people will be coming. But if it's a wholesale loan in a wholesale branch, there are many professional, I can say some chartered accountants also who market the loans. There are professional DSAs who market the loan, or there are some middlemen who get the loans. Now, if there is some middleman who is getting the loan, I would take care that I check the loans which are coming in through a middleman. Because generally, when the middleman is getting the loans, the quality of the appraisal gets compromised because of lack of independence. Because there is some internal connection, there is some quid pro quo. Generally, I'm not saying always. And as a result, there could be some dilution in the appraisal norms. So, one is how has the loan come to the branch? So, even before the selection, there is one more criteria for filter lenses. How has the loan come to the branch? Who has marketed this? So, after going through this criteria, then how many accounts which have come up have been rejected and not even taken for appraisal or sanction? So, each branch is ideally supposed to maintain a register of advance proposals which have been received and which have been rejected with the reasons for rejection. Now, if this is not maintained, this is the first point you can write in your long form audit report that such a register, such records, such documents are not maintained. Now, we have gone through that stage also. The marketing stage, the rejection stage is over. And now this advance has come to us for appraisal. Now, how do we do that? And this is where first thing which comes in is the updated credit policy of the bank. As auditors, do we have access to the credit policy? Yes. So the credit policy talks of appraisal. The credit policy talks of sanction. The credit policy talks of documentation. The credit policy talks of disbursal. Credit policy talks of review, supervision, monitoring. The credit policy talks of accounting. The credit policy talks of recovery and collection. The credit policy talks of litigation. The credit policy talks of compromise, write-offs, OTS, settlements, whatever. And the credit policy also talks of final closure of the account, handover of the documents. So the credit policy starts the advances journey right from the start, right from the marketing loan to the end closure of the loan. So one by one, let's see the various processes. The first process is the appraisal process. Okay. Huh? Now, credit policy is not a public document. The credit policy is an internal bank document. It will not be allowed for. And usually there are copies of the credit policy which is there, which is kept with either the branch manager or the credit manager. But generally, this credit policy is available on the bank's intranet, and you would have access to the credit policy either in the soft copy or in the hard. As an standard,
Professionals are DSCs.
so one is if there is no official commission also because the bank doesn't pay anybody, the basically the commission is paid by client. Client pays because you are arranging funds for the client, right? So one is you ask if the branch manager is or the credit manager is willing to tell, it is fine. The other thing is at various points of time in the file also somewhere it is written recommended by so and so. At many branches in the file it is written, so you will come to know.
There is direct quotation from that, so we, the,
Fine, so let me, so there, if the DSAs are there, it's fine, but DSA is good generally in case of retail loans, if the DSA is there, please look. Because that time they take a lot of waivers, because DSAs are bound by targets. DSAs earn commission as a result of any loan which gets processed, and as a result, these loans will be subject to some dilution of the diligence norms which are applicable. Now, if you see the recent papers which are coming in, the newspaper or the news which are available on the net, RBI is talking about credit exuberance. A lot of retail lending is happening, especially mortgage lending or top-up loans or unsecured loans. I really don't know as professionals how many of you get a call from a Bajaj Finance or L&T Finances. Do you need a loan?
yes, yes.
There are not loans are being given. They are not even seeing what you do. They are just saying, okay, you are a CA with 30 years experience, okay, I will give you 30 lakhs loan. So in my case, they say you are CA. Whatever you are doing, you do, and the money is going only into the stock markets. Now, RBI has plans to loan money which will be invested in stocks. Technically, you can say you are an investor, but it is not on record. So, what is on record is this unsecured loan, and it asks the borrower to write that this is used for renovation or buying certain. None of these records of equipments are on record. So if there is such a loan which is there, and if the purpose it is written, that it is for buying of some furniture, office renovation equipment, please ask for the bills. Generally, you will not get such bills. In that case, that will be your general remark in the long form audit report that the end use of funds has not been verified. The loans have not been given for the purpose for which it was sanctioned for. So that is one point which you can write. So you'll get many points. One is, as I said, the register for rejections will not be maintained. The second question is there is no register for who has sourced the loan. That also needs to be maintained. If that's not maintained, you can write that as a second point. The third point, end use of funds is not there. Now, one, see, if it's not made available, one, made available or not, if the credit policy is not made available, how can you complete the LFAR? If the credit policy is not made available to you, he says, I will not give you the credit policy. The first thing you do is pick up the phone and speak to the branch head's boss. If that branch head's boss also says that the credit policy is not being given, you pick up a phone and speak to him. If still the central statutory auditor is not able to give the credit policy, you can clearly give a disclaimer in your entire LFAR on advances, which is about 40% of the LFAR, that because the credit policy has not been made available to us, we are in no position to comment because anything has to do with the credit policy. If they have done a particular appraisal, if it is not as per policy, how can you comment if you don't have the policy? So, the credit policy is a must. There is no way the bank will not make available the credit policy. But there are cases where the bank will not make a continuously go with- How do you check this? So issue appropriate disclaimers whenever necessary.
Especially it's also mentioned in the credit policy.
Everything is mentioned in the credit
Otherwise,
policy.
branch manager may exceed his limits.
If the branch manager is exceeding his limit, when the amount is sanctioned, there is a sanction letter. There are always powers that even if it is in his powers, it has to be ratified by a second authority. Now, let us say the branch manager is a chief manager. The chief manager has powers, let's say, of about 1 crore. Now, if there is a loan which is sanctioned for 90 lakhs, it is within the branch manager's power as per the delegation of powers. It still will have to be ratified by a AGM. If that is not done, that is another issue. But it is within his power. Now, if let us say the sanction is for 1 crore, he cannot sanction it also. It will have to be sanctioned by the AGM. He'll have to recommend it for the AGM to sanction. Big difference. If it is within his power, he can sanction subject to a ratification. If it is not in his power, he can only recommend to his boss to sanction, which is within the power of the if the AGM sanctions, the DGM has to ratify. So the basic maker checker in a bank is that the level next to the level sanctioning has to ratify. It's a normal like a checker. The maker is standing, the checker approves. If this process is not there, or we state that this has to be followed. This is another big issue. Various cases come up where this is not followed. So, one is the level who has sanctioned it. Number, the appraisal process. How do you appraise
Civil score.
CIBIL score? Anyone else? The balance sheets, the past balance sheets, and the future projections. Mostly, if it's a new account, so one when you go into the branch, you have advances which are there for years coming in, or maybe which is not a fresh sanction. So again, I'll ask what are the fresh sanctions during the year, or additional given, or somebody may have been given a new facility itself of approval or whatever. Now, your diligence and new facility will obviously be more. In case of an existing account also, there will be some checks, but let's come to a new account which has been sanctioned. So let's say it's a new account which has been sanctioned. You'll obviously check the CIBIL score. You'll obviously go through his financials earlier. But if it's a new business, let's say new entrepreneur coming in, you'll obviously go by his qualifications, by his earlier track record, by his experience, by the project report which he gives. Now, who has made the project report? Generally, the project reports are made by professionals like us. And this is a smart plain Excel. He will just project whatever sales he will make. I think what the branch manager does is he looks at the collateral when he sanctions the loan. So always when a loan is sanctioned, a bank looks at the 3 C's. The first C is character. And character is also another C will say whether he has a good character or not is the CIBIL score. If the CIBIL score has a default, then his character is not good. So what? -1, 2, 3, whatever. But if the CIBIL score is bad or he has previous years with default as an NPA, then he's a persona non grata for the bank, they will not consider it. Now, assuming he doesn't have that, so let's say he is an NPA, he's got his wife in as a borrower now, she has a clean record. The question is, does she have the qualification or does she have the experience? So again, it's not difficult for somebody to have the experience. You have the classic case of a Rabni Devi becoming the chief minister and running a state. So you can still have woman empowerment. No, but you still will get the loan. You all have the experience to do it. Second thing we can see is the collateral. And that's where banks make the biggest mistake. Because a loan has to be looked at not just from the collateral, but it has to be looked at from another C. So, bank lending, it's all about C. C is credit, C is character, C is character, C is civil, C is condition, condition is the balance sheet, which is another C, the charter account. And then you have collateral. And there is one more C which is really important. And that C is the cash. So whether the business will make cash flows, which will be enough to repay the loan installment, is what is the matter in question which needs to be addressed. So the credit worthiness, competency, the credibility, the integrity of the borrower. Now, I just put myself in the shoes of the lender. And if I was in his shoes, would I have lent money to the borrower? If I have, it's fine. At a bank level, we ask those questions. But when we are central statutory auditors, and when the Reserve Bank of India asks us questions, it asks us questions on governance. It asks us why work and why are we giving to you. Now, one is as statutory auditors, central statutory auditors. We also can your and if we are, let's say, appointed as it's throughout the year, I can't go to the bank and say every loan which you are saying, you check with me whether I'm right to sanction or not. So responsibility falls with another C, and that C is the account. Now, because in a lot of banks, what they have said is that disbursement can only be made if there is a sign off by the concurrent auditor. Disbursement for a sanction or an enhanced sanction, any additional limit can be sanctioned, can be disbursed only if the concurrent auditor has given a sign off that all terms and conditions of the sanction have been fulfilled and that the necessary implementation has been done. So the concurrent auditor comes in the loop. Now the concurrent auditor is aware that the concurrent auditor disbursed because he is the one who's basically signing off that the disbursement can be done. Now this is another responsibility being passed on us professionals. So if there is anything wrong with the appraisal, there is any wrong documentation which is done, the concurrent auditor is given the sign off and he becomes liable. So if you are a stat auditor, please discuss also with the concurrent auditor what he's done. And if he's signing off, please ensure whether he's really understood what he's signing off or as a normal routine process, business as usual. Some junior article of this has checked this and basically signed it on.
With your permission, I'll add one more C. Constitution of the borrower. If it is a limited company, it is a structure, and you can check independently with the
Yeah.
FCSI. For individuals, firms that is not available.
So if it's a private limited company,
State finance corporation, every state has a state finance corporation.
yeah,
They prefer advancing to companies.
but each bank will have its own philosophy. Yeah, whoever a person staying in Anchor, if he's a person who is basically running a beauty parlor or who's running some other business, each bank will have its own philosophy of blacklisting certain people based on their previous experience.
This bank, a subsidiary, a circular banks. They avoid three P's. Police, politician, trader. How
So they certainly they will take please see the loans which have been rejected. In such cases, so police,
politician,
politician, and trader first okay. In such cases, if the loans are rejected, see the reason for rejection. It's a very good point. Is what. I did not give application of house. I don't give the application. Money. So they will not refuse to take.
Adam joined the Russia.
Yes, so one is constitutionally, a banker cannot refuse to take an application. Something officially the he will never know what. The point is, I'm saying this is each bank is supposed to give the reasons for rejection, and that is in the credit policy of many banks, especially foreign banks, which we do, especially private banks, which we audit. If a loan is rejected, they have to give a reason. And these reasons are really good reasons. If you pick up those reasons and apply those reasons to you may lose what you are getting. So use some good smart good for can be good story which will not run in one part, which will need two parts. So the appraisal, the predictions. Now banks have three benchmarks. So reach to one. The second is your four. So benchmark of twice the distance value and at least not a benchmark the general do which general bank will do in case it's a person or it's a portion. So marks are there. Obviously the bank is flush with funds So obviously the bank has now the issue is not in the first year, it's sanctioned. The issue is in the subsequent year, actions which can be used, whether these projections have been fulfilled or not. But generally the projections are not just realistic, not just unrealistic, these are just Excel figures just to get the look. Let us say in the next year, these figures are not achieved. How is my working capital or my drop over being fitted in? It's the biggest issue.
Renewal. They charge penal extra interest.
Penal interest is fine. There is a risk reward ratio. So if the DT is not met, let's say there is some penal interest which is there, but is the bank reducing the limit?
The bank is what they are doing, they are taking another projection and they are justifying the projections because of source reviews of
That's fine. So they are justifying the reasons for basically the turnover not being achieved. But ideally, how can they match your working capital drop over? Because the RBI definition on frauds, the RBI definition on frauds is very clear. Inflating figures of working capital, that is stocks, debtors. So increasing stock and debtors or reducing creditors. So as drop cess funds is fraud. Very clear. Your RBI marketing circular is very clear that if you are drawing excess funds, that's fraud. If there is a siphoning or diversion of funds, that's fraud. If you are having the capacity and the capability to pay the loan but are not paying it, then you are a willful use, especially at the time of disbursement. The concurrent auditor certifies if the term loan whether the money has been given actually for repayment to the supplier who has supplied this machinery is what is seen, whether there is a credit to the current account or there is a credit to the cash credit account or whether there is a credit actually to the supplier against an GST back invoice is what for an end use of funds we need to see. So whether that end use of funds is properly done. And a lot of times the end use of funds is relied upon by another certificate from another chartered accountant. So at times there is just a one-liner certificate. In the case of so and so, in the case of this loan, we hereby certify that the end use of funds is in order. Now whether as a statute, or you would actually want where the funds have gone to with this was the loan, this was the requirement, this is the quotation of bond, this is the quantity to is credit. What should the certificate look like with a loaded number? Yeah.
If the borrower is a company, sir, the SBA can see the CARO of the borrower. CARO clauses specifically.
I come to that. So the point is you are going a bit ahead. If I am disbursing the money now, let's say I am disbursing the money in March 24, I have to certify the end use now.
Yes.
The CARO for that year will be March 24. The account will be signed in July. So, will be used in answer. Now, CARO 2020 also has the statutory auditor to certify only the end use of funds is in A, whether there has been any default on the loans. Now, I come to another. whether the borrower has defaulted on any of the loans borrowed from banks and financial institutions. Now, this is something which, as a chartered accountant, not as a bank auditor, as an auditor, you be careful. Default means even a single day default. So, if the borrower is in SMA 0, if the borrower has been in SMA 1, if the borrower has been in SMA 2, and if that borrower is a private limited company which is subjected to audit, both chartered accountant is supposed to issue a taro, and that taro is supposed to contain whether he is a defaulter or not. And if he is not, then what do you do? So I'm asking the question. Yes, he is a defaulter. He's not in NP, he's a defaulter. He's in SMA 1, SMA 2.
In a genuine case, sir, my client kept the funds ready.
Let's ask the question. So we'll take this later. So he's a defaulter, and the statutory auditor of the borrower has not stated in his taro that he is a defaulter. Now, let's say he's the statutory auditor. He's saying, who is concerned with his funds? I'm concerned with reality, right? So what do I do with the statutory?
SBA.
So what would you do? So you figure out. You and the gentleman is the only authority, and he is not certified that he is a default. So two cases. So what does the branch auditor do? Can we rely on the financial statement then of the auditor? No. The point is, here is a classic case of a default. You can evidence from the bank's report,
SBA.
SMA. Many cases which I would, there's something which I would like to share my experiences or my knowledge, whatever I have done. So maybe you could do the same if you find it. I immediately called up the chartered accountant and told him, well, this is a mistake. So the next time, please rectify.
Yes.
So wherever I found mistakes of other auditors, especially where I found end use certificates given in just one line, I may write whatever in the LFAR without naming the auditor because he's my to see that he's protected without not compromising of my duties and responsibilities as an auditor. So I would generally say that the unit has to be there and the end use certificate has to be completely detailed. I would make a general comment without all the auditors, please do so. If the auditor wishes to listen, is fine. I have got mixed responses. Again, do not bother because I feel it's my duty to tell. At times there are auditors who have thanked me. At times there are auditors who have abused me, saying, "Who the hell do you think of yourself? I do whatever I want. I'm fine. Sorry, I made a call, but as a fellow professional, it's my duty to tell you if you're willing to listen, it's fine. Not willing to listen, it's okay. He said, I'm right, you are wrong.
It is over.
So, fine, it's over the phone. So, it's not who's right, who's wrong. It's my duty. So, another case in the LFAR, when I'm going to the LFAR, this case will take us. So, concurrent auditor, we cannot rely blindly. Why? Do you type the audit report? Do you paste it? Online, you are not pasting. Online is another, it encourages us to do it. So there is something which you write in the audit report, auditor's responsibility. And in that auditor's responsibility, you state that you have conducted your audit in accordance with the standards of auditing. Now, have you really conducted your audit in accordance with the standards of auditing? Now, these are, I think I'm seeing three girls. They may be fresh chartered accountants or students, I don't know. But they have studied the standards of auditing recently for their exams. After this week, I have spoken on the standards of auditing at least in 50 seminars. I have lost count how much over 50. In the last week of December, for the continuing professional education, where you need 2 mandatory hours on standards of auditing, I would have spoken in the last week at least 5-6 times, physically in Mumbai. I've spoken at places where the registration was 300 to 285 people in case. And still like me was spoken at least over 50 seminars. I've been a member of the Accounting and Assurance Standards Board. If you look up the institute website, you will find many videos of me speaking on standards of auditing. I'm a faculty at the Center of Audit Quality. Yesterday, again for the BCAs, I spoke on SA 315, 330, that's the three standards, and SA 240 on fraud. So one is we haven't really, in fact, I have also not read the standards of auditing in full because there are 38 standards, each standard about 35 pages. I have done fast reading. I have done that same over and over, but word to word, line to line. Now, answering his question, can we rely on the work of a concurrent auditor? That answer is in SA 600 series, relying on the work of another auditor. And what that stands is you cannot blindly rely on the work of any auditor, even if he has signed the report. You have to do a competency assessment. You have to find out the concurrent auditor, if he has audited, who's the person in his team who has done the audit, whether he is competent to do the audit and issue the report. You will find out that the concurrent auditor hardly has visited the branch. The partner has just signed, some article would be coming and doing it. So if you have not spoken with the concurrent auditor, you have not done a competency assessment, if you have relied on him, so you still be accountable, even if you have relied or not relied. The point is, if there is a liability, if you are put before the decision, if the concurrent auditor luckily is not, you can't make him a co-accused. If the concurrent auditor is caught, fine. You can still be the co-accused. Both can be the co-accused. But if the concurrent auditor has escaped it, generally, concurrent auditor you still are accountable as the staff auditor because the first person who's asked when something of a fraud is there is what? And then we rely.
Yes, here the department retired actor.
So whoever he is, it is whether it is the use of a chartered account or any other report, what the standard requires is you make your independent verification and corroboration. You don't use any report blind. Simple. You state so what you have done. You have basically conduct this You can say that. That will be factual. But it will still not absolve you from your responsibility because you are independently liable for something going wrong in the branch because you are the stat auditor. Now, let's come back to we've sanctioned, we've disbursed, and the question is of monitoring. RBI, why this 7 May 2015 circular, and just note this circular date, 7 May 2015, has stated 42 conditions, 42, which they call as early warning signals. And each of these 42 early warning signals have to be monitored by the system. You get a system code on in the EWS reports, cover your LFAR. There is enough masala in the credit policy also. Because the credit policy for whatever appraisal, sanction, disbursement, documentation, monitoring, review, supervision, whatever would be the area, credit policy is always the idealistic utopian policy. It is what something like we recently had this Ayodhya. So Sri Ramji is the favor of the season. Maryadya Purushottam. Credit policy is the ultimate. It is made by external, unfortunately, who have been trusting a lot to the bank and they need to justify their fees. And any policies and they severe situation, which unfortunately is also with the standards of auditing. And the biggest risk to the profession, which the institute has realized, is that we are not following the standards of auditing. And the second thing is frauds are on the increase. For whatever reasons in the hookah, banning world, whatever we call it. And because when there is a fraud, and now the chances of fraud getting detected are a bit higher. And when the frauds get detected, the first person who's in question is the statutory auditor. What is the defense of a statutory? The only defense for the statutory auditor is he was not grossly negligent. He was not a conspirator, conniver, colluder. There was no way that this deed he has done. But and the most basic defense which he takes is that he conducted his audit in accordance with the standards of auditing and he has done his documentation as per the SE. So what he relies is he relies on sampling and he relies on materiality. He says I connect to certain percentage as a sample and the case which was a fraud did fall in my sample. So he has to document please be clear on the number which you do. If in a gold loan there are 10 accounts, please take, I'll check this 100 account. State the number of the loan. State the name. Because if there is a fraud in the balance 9,900, It is not that you will not land up in Vijayawada jail. You will still land up. The thing is, you might have a 3-year sentence instead of a 5-year sentence. Because it is very clear this is what I did. I did a sampling. Or and in those amounts which it to conformity, there were no mistakes. Now, again, fraud. Gold loans is a basic area where in one day, we were the bank auditors. We observe many NPAs in gold loan accounts. And NPAs in gold loan accounts are not difficult because the borrower takes the gold loan only at the last. What banks have done is, that generally the government which belong to the lady. Second control is what a lot of banks are doing is a window dressing. Is what they do is there is a loan and they generally have a bullet repayment. They collect the interest upfront 6 months and they have a bullet. Or if about 2 lakhs or 10 second one, they have a B. Normally the borrower does not have the money to repay. Now whether you would extend the gold loan, if you keep on extending that, it would reach selling, which would fall under your LD law. So what banks do is, and I've seen banks doing it, if the banks sanction him one more loan, they sanction a new loan, they give the money in his current loan, they each more loan, one, there are 2 gold loans. For a temporary period of, let's say, 1 minute, 1 second, whatever it is. There are 2 loans, one which is non-executive. This is fraud. Any book adjustment, anything which is suspense, I don't know why the word suspense. If very this how in your financial what will nothing like suspense. If there is anything like suspense, it should be cleared immediately. If there is an inching in suspense, obviously there is some weakness.
Stable suspense.
One thing. One, 2 more steps. Some gold. It's not there in the policy, so if there is certain thing happening, please raise your voice and stop this practice. So, see, you are lucky, it's your face. One policeman. The duty is to point out in my audit report and what the regular you start case which I'm pointing. Also check this. of a firm. The bank was opening savings accounts which were in the name, and the bank seeing a huge cost. And the bank was talked about that this has got CASA of over 40%. Other banks are not even getting 20%. And it was getting because it was giving interest of 3.5% or savings account. So should not be open only a savings account. If these accounts are closed as savings account, why will those borrowers open? Why will those account holders open a current account with this bank? They will go anywhere. So, if this is intentionally done, and when there is an interest or a mens rea, it is full. Another case, a borrower was submitting stock statements. He was a pharmaceutical company. Stocks were valued at money. Now, stocks you are net realization value. You are taking an enhanced huge the time. We are the there is a stock audit. You only said that. Actually, second one because they are not reported. I will say that because you are not there, I understand mostly. So what did the stock auditor do? Stock auditor, he spoke with the stock auditor, he said this is fraud. Now the branch managers got a fresh report from the stock auditor which removed the word fraud. He is presenting to me this is not fraud. And this is a drop over issue. And he goes to the RBI circular saying this is a temporary drop over issue. And he asks the borrower to deposit certain money so that his whatever as per the override. So till the 10 days I was there, whatever was the drop over by beg borrow still he got that money in. Now I have nothing to say, it's a I know it's a then because very well gone and verified. As of date, since he has got this money in, I am reporting as of that date. So I put it. Ideally, I can be technically then the stock auditor who has not reported clear reported into to it at certain point of time. Again, this is now there is no evidence for you as of record because he's got things in order. Yet, like an internet, you need not report it. Without the money in, what is the account in credit? But you know, you got an account in credit. Now subsequently, I don't know, after look that day he was no longer a borrower. There is no limit only. Now such window tracing can be done, especially accounts which are regularly on the balance sheet date. There is a solid increment. There is that auditor must be satisfied. And we have also looked at so the borrower has a cash credit account. At cash credit account, there is a limit of let's say 1 crore. The account is always over 1 crore for 361 days. And only one day it has got money below, and that too in certain cases just by 1 paise. So the system does not technically classify it as an NPA because he has paid just enough of the interest or the cash credit, and the system not to classify it as an NPA. Now system does not classify it as an NPA, but that turnover is not there. There are no credits in the account. The company is making losses. The debt equity ratio has gone for a toss. The DSR is for a toss. The current ratio is toss. The quick stock audit is not there. The balance sheet does not tally with anything which is projections and whatever. Now, in this case, will you make the account an NPA or not? Should be. Now, if you make this account as an NPA, you will have the general manager of the bank. You respect to because the PR uses its discretion because they come subsequently, and they come subsequently in a period where sufficient time has expired for them to be conceiving, and subsequently also the and what they expect us to do is that this account has been regularized by solitary credit at the year end, and whether you are satisfied or not, the auditor can use his discretion and say, I am not satisfied, because this is a subjective clause in the IRAC norm, and he can and he should classify challenge otherwise. So I think the biggest challenge or the biggest skill which an auditor should have is the courage to call a spade, the courage to pass an MOC, the courage to put the specific parameter. Because if the account is classified as an NPA by Reserve Bank of India, the Reserve Bank of India is well far, and the Reserve Bank of India has at various times for cooperative banks, especially by written to the institute of gross negligence.
Disciplinary action.
And why should disciplinary action should not be initiated? And in case there is a fraud, you will have ED notices also to you separately with then writing to the institute about this and so moto sending you a. So wherever frauds are not there, you are frauds in each bank because of diversion of funds, siphoning of funds, or the fact that Maybe in each branch in India, in each bank, you might find one case. When we call it a fraud, reality maybe for not. Reality is not for should be very clear on and materiality for fraud. Fraud. Don't accept it. Still, you attempt to defraud you. Now we are calculating fraud only if there is a scheme. Here the zero. There is no fraud. If it's a fraud in lakhs, you will only say this is not worth it. This guy is a petty fraudster or a petty thief.
Okay. SP current account, savings current.
Ah.
Then a particular SP account has to be compulsorily made as a current account.
If it's a business, savings is savings. If you are checking into business, don't you are have a savings account, only a society of the will as we are opening accounts of chartered accountant proprietors also of savings account. Why will you not open an account there? You are getting 3.5% interest on your balances.
GBP income. And any restriction on the volume in SP account?
There is a restriction.
40 income.
Ah.
If the volume is saying thousands or number of transactions or more,
If you have a rental income and you are putting that money in savings account, technically the bank can refuse to open a savings account for you. This is not saving. This when you are having multiple rental properties, that is in the nature of your business. Savings account, ideally, in principle, what a bank understands is if you are drawing a salary account or it is for your withdrawals which you are doing, transferring money from business to your savings, keeping the savings part in the funds. If a bank account is withdrawing per month, then to maintain the
family business or so.
and use of funds properly, they transfer this withdrawal to the savings account and the savings account. He will not operate it from business. He will business and savings.
They also civils are very, they are hard touch.
So I hope we are going well.
Yeah, we'll take 10 minutes break. We'll resume immediately after that, please. So we have snacks outside. Please have the snacks and come back immediately.
Again,
The వేడిగా ఉంది చల్లగా కూడా ఉంది.
I got okay.
So I remember junior speakers. So I was in one branch and the branch chairman.
Like,
The branch chairman. Speak anything. Back.
Yeah, I'm working it on the line. Actually, I. The police. Yeah.
Higher amount and the valuer is at fault. That the valuer has inflated the valuation so that the borrower gets a higher amount. So that when there is a default and when you try to sell, you actually don't realize the amount. And finally, that is one case. The second is one auctioneer is only picking it up. So is it that there is some collusion between the auctioneer and the person who is buying it? So these were the questions raised by me. I was a concurrent auditor, not a stat auditor. And you know what happened? I didn't get the assignment. But that's fine. I did my job. If something of a fraud would have happened, but what did I? My duty to check each and every loan and see what the packet is. So if there are 10,000 loans, I would still open 50 packets and see whether the gold is actually there. And I would describe it in my LFAR that this is what I did because I can't open all 10,000 packets. I opened 50 packets. Unfortunately, if in that packet, the gold was there at that time, and subsequently there is some issue later on, I also can't help it. Now, that is a question of custody. Because when the gold is given, you are saying that the gold is there of so and so weight and so yield. You have verified it as on the date it was there. Now, you have mentioned it in your report that these are the gold loans you have checked. And this is the gold loan. What we do is these were taken. So we describe the process. So the gold loans were verified by us in so and so safe custody. They were removed by so and so custodians. We verified it. And immediately they were put in safe custody by so and so. And what we do is we check the removal and the putting in. There is a register where if any sensitive documents are taken from the wall and put into the wall, there is a record. One is the point which you ensure whether this vault movement is there, especially for sensitive documents also. Because at a lot of times, when the documents are missing, the statutory auditors or the concurrent auditors are also called into question. बस आपने वो statutory audit के time के documents निकाला था देखने अभी मिल नहीं रहे. So what we do is we make a record. If a register is not there, a lot of banks have registered that this document was taken in on so and so date for verification by so and so person and it was removed. So he signs that he is removed and he puts in that all the documents are back. So the responsibility is not on the audit, the responsibility is on the banker. If such documents or register are not there, please fill for yourself. Otherwise, subsequently, you would also be held a party to it. If subsequently the gold loan was missing and you have seen that gold loan and you were seen at that time it is there, the question may come to it was not there when you saw it and you will also be held liable. So prepare the record of what it is in, what has gone out. So you safeguard yourself, especially for documentation. This is gold loan mein itna nahi hoga, it's a far, but it has happened.
Oh, at least CCTV footage if it is.
So CCTV is there, but CCTV recording, you will not keep it with yourself, right? If the CCTV you see in Hindi movies, on that day when there is a fraud, the CCTV will be damaged. And so it's smarter. Watching Hindi movies or watching fraud sessions or something. So please, as an auditor, please ensure your safety first.
Save your skin.
Save your whatever skin.
Yes,
Have the skin of a rhino.
Yes,
Or
so
save yourself.
so
Now, how can we save ourselves? How can we save ourselves? Documenting. One is documenting what we did, how we did, and to what extent we did. So documentation, there is only two truths. There are only two truths. One, death and taxes are a reality. One, there is nothing called oral communication. So the only communication is a written communication. And unless something is not documented, it is not considered done.
paperwork.
Paperwork is very important. At times, paperwork is only important. Because if something goes wrong, it is only that paper will save you. So there is nothing called oral documentation. There is only written documentation. And something which is not documented is not considered done. So please document. All your essays will tell you what to document. Now one. How many of you have qualified the accounts? How many of you have qualified banks? You have qualified? You have qualified. There are 3 people who have qualified. Do you know what SA 705 tells you about qualification? Have you followed SA 705? So even if you have qualified rightly, now there are 2 things. One, there is a qualification, you have not qualified. That is a bigger crime. The lesser crime is there is a qualification, you have qualified, but you have not followed SA 705. That is also is a crime. But see, you are what we call in Maharashtra Shivaji, the ultimate. आप शिवाजी हो, आपने क्वालिफाई कर दिया, बट SA 705 कौन फॉलो करेगा?
Necessarily involves
Mostly is a qualification, but mostly what SA 705 says is that if you intend to qualify, that is, if you intend to pass an MOC, you should write to the branch management that this is the MOC or the qualification you intend to give, and this is the reason for the qualification. So the proposal dena chahiye, love letter. Show cause. Then he will reply why the MOC should not be passed. You should give him reasonable time. Then, when you have responded to that show cause, like the Indian IT guy is. So when you have responded to the show cause, you feel that the response is not correct, you add your rejoinder, and then let him hear something like that. But he has to stop. Say, I am not satisfied, I am qualified. But there is a correspondence, that correspondence has to be there.
Opportunity of being heard.
Opportunity of being heard. Now, if you clear in your minds and see the qualification and ask you, show me the correspondence as mandated by SA 705, even though you may have qualified okay, in terms of SA 705, you have made a mistake.
taking the DM into context.
Sir, MOC is countersigned.
MOC is countersigned, but still it doesn't meet the requirement of SA 705. SA 705 becomes signed.
True influence.
What research?
MOC is a temporary document.
Whatever. I'm saying this is SA 705. Now, huh?
Commander won't give answers to us, sir.
Saying this matters. The see. Now, the unfortunate part is, we in our audit report, we state that we have conducted our audit in accordance with the standards of auditing. That is mandatory to say, because that is as per the, not the format. The Companies Act says this, for code of ethics says that non-adherence to the standards of auditing is a professional misconduct, and you could face the discipline. So essays is a must. What is to be done in essays is also a must. Now, how many of you know that there is an essay called Essay 501? What is known as Essay 501? So I would ask,
Yes, expert,
huh?
trans expert.
Essay 501 is that the auditor should specifically look into 4 matters. One is inventory, one is segmental, one is litigation, and the 4th is claims. Now, inventories, it talks of completion and existence. So, when there is an inventory in any financial statement, say 501, apart from normal essays, for you to go more in depth and see whether the inventory is in existence, we have to pull through, verify whether it is complete. So any frauds in inventories are not allowed, because if the fraud is not allowed by SA 240, again in SA 501, there is a specific reference to inventory. Now, you have your SA 315, SA 240, and SA 330. SA 240 talks of fraud and errors. SA 315 talks of risk assessment through understanding of the entity, its environment, and its internal controls. And SA 330 talks of auditors' responses to assess risks. So, what is a risk in a bank audit? Anything is risk. So, anything is something which can go wrong anytime. Anything which is unknown, which is uncertain, which is unexpected, you know something. Which either we don't see coming for whatever reason. Is actually or in any audit statement.
Not finding.
Risk of misstatement.
In any audit, what do we state? We state that financial statements give a true and fair view and are free from material misstatements. Now, when we are saying material, we need to know what is materiality. Materiality is defined by SA 320, and materiality is not a number or materiality is not a percentage. Materiality is a very broad definition. Materiality is anything which can influence the decision of the stakeholder. So he can alternate decision based on the number which you have given. Because where why he would have decision is materiality. Very broad. Materiality is not just amounts, it is also to balances, it is to classification, it is to presentation, and it is also to disclosure. So if something is ought to be disclosed is not disclosed, if it is material which alters the decision making, it's still a misstatement. And what is a misstatement? Misstatement can only happen because of fraud or error. Now, fraud. RBI has defined fraud very amply. A normal understanding of fraud for Indian Penal Code, because finally fraud people understand it with crime, jail punishment, CRPC, and CRPC amendment, some new code will come in from 1st April, whatever. So till that time, fraud is still meant free, a guilty mind, a intent. Attempted fraud is also fraud. If I don't know how many of you are aware, if you do a cash verification, and if you find a difference in cash over 10,000 rupees, it is fraud. How many of you have found the cash difference of 10,000 rupees and not report? Yes. ATM difference is there. If 10,000, if you have found it and the bank is not able to reconcile, and there is a cash hit to the bank more than 10,000, it is a fraud. If you have not reported it, and somebody comes in and says a non-reporting and blames you, you have no defense. Because ignorance of law is no excuse. This is a clear-cut RBI circular. Pipeline, money mules, beneficial owners. These are frauds. So in a bank, in an advance, the other fraud which is there is the money mules or the beneficial owners.
ATM has to verify that it has to buy information.
So whatever is cash, no, CDM, ATM, whatever. Now, are you aware who are money mules or beneficial owners? Money mules. Huh? Shell companies.
Scam transaction. Scam thing.
Not money mules are basically, why is the name money mules? Who are mules? Mules are somebody who carry the load. And money mules, those who carry the load of money, pyramids, shell companies. So you will have, actually you should go and see. So how many of you do something called deduping or ensure that a deduping is done? So dedupe is what you might understand from the next lecture. You can ask him specifically on dedupe. Is multiple email addresses or mobile numbers linked to one account in the reverse. So there is one mobile number, one email, one address, maybe one PAN, and too many accounts.
Phone number uniqueness they have brought some. Per account.
So phone number uniqueness they have bought per account, fine. Email account uniqueness is not. So this, the borrowers will also become smart. If I want to operate something as a chartered accountant who is into tax evasion, why will I do things in my name? I will have my driver, my housemaid, be directors in some company and operate. So that's why I say when you do your diligence, have have you seen that this person has at least come to the branch? You've seen him. So there were many cases of fraud which have been unearthed where people, and especially you will not see this in borrowings. You will see a lot of these in current accounts. And especially you will see a lot of these accounts who are operating in the share market are opened accounts in the name of my driver, cleaner, maid, whomsoever you call, and I'm actively trading in the market of health. It comes up to 7 lakhs or whatever, or less than 10% or less than 20%. Now, whether this is a suspicious transaction or not, and whether that needs to be reported or not. Now, when we were auditors, as a stat auditor, we found multiple cases where such accounts were opened. If you see the KYC and if you look at the name of the person, due respect to some names, due respect to his qualification, anyone can become anybody, proved in the country. Forget the qualification, forget the name, forget the locality he is coming in. So I really don't know Vijayawada, which is the posh locality, but let's say Mumbai, Cup Parade, Bandra, Walkeshwar, Lokhandwala. So maybe somebody where Ambani stays in APMC Road. You will not have somebody who's not an HNI staying nearby. But somebody who's an HNI will not stay in a Palghar or Badlapur in Mumbai, which is 75 kilometers away. And that person definitely will not trade in crores in current account. And if you come and ask him what shares are, he will never know what equity trading is ever about. Now, these are beneficial owners or money mules on which RBI is very critical. So, the biggest area of risk is not advances for RBI now, it is money laundering, which is happening through this money mules. And yes, we found a lot of these accounts where these accounts were opened, transactions were being done, and the profit used to be taken out, and finally it used to go into one account or one chart account. There are 10, 12 accounts in that branch. And finally, all of these was going into one account or one chart account. Now, I didn't call this chart account. Why should I call him and tell him giving him something? So I called the concurrent auditor and said, "Boss, this is clear-cut case of a suspicious transaction and you have not reported it. I am reporting it. You still have the March month to report it, because when we go in April, the March concurrent audit is not issued." So as a help to fellow chartered accountant, like they are not reporting the defaulter in the cargo, if you find such cases where the concurrent auditor ideally should have done this, please call him. Again, मैंने बहुत concurrent auditors से गाली खाई है, नहीं हमको time नहीं है. But when I say this is something which I call, then they come running. Some of them are still not bothered. But from your side, please do whatever you can to help them at least rectify the mistake in March. So